Hey traders, Todd Gordon here with TradingAnalysis.com. This is CNBC's Trading Nation. Traders, we have to go to work on the short side in Apple. The market has tried as hard as it can to put in a sustainable bounce, and it seems to be that all the pressures that are being applied to the market are just too much for the bulls to bear. FANG continues to be a major source of weakness here, so we need to look right at the crown jewel here, which is Apple. This is the weekly chart in Apple. And what I find very interesting about this chart, since you can go all the way back to 2000, this weekly chart with a 200-week moving average, right? So the average price over the last 200 weeks, essentially it's a 4-year moving average, has really been the defining technical indicator for Apple. You can see every pullback that we've seen really has come right down to this purple 200-week moving average back here in 2009, 2013, 2016. And look how far away we got from that 200-week moving average. Wonder if a little mean reversion, which quite literally, that 200-week moving average is the mean price of the last 200 trading weeks. That comes all the way down to 150. Further, what I would show you is look at the momentum divergence, the RSI divergence here. As the price has continued to make new highs here in 17 and 18, look what RSI did. It made a significant high in 2017, but did not confirm that push above 200 here in 2018. That momentum divergence, that relative strength divergence is unwinding, and we are pressing lower. Granted, those of you who are following the technical indicators, RSI is pretty oversold at 30, but I think the history, the prior 4 or 5 occasions, one, call it down here, that's 1, that's 2, that's 3, that's 4. This would be the 5th test of the 200-week moving average, and at the current rate, that's about $150 a share in Apple. If this overall market is going to take another leg down, I think Apple wants to go down and test that $150 level. So here's what I have queued up for us. In the February monthly options, I'm going to be buying the 160 put as we trade 171. I'm going to be selling that technical objective at 150. Altogether, that's a $2.50 debit to our account on a $10 spread. Max potential profit is $7.50. But in other words, $250 is the max risk you take on a one lot, buying one of the 160 puts, selling one of the 150 puts. That's all you risk, potentially to make $750. So if you want to size up and let's say do 10 lots, okay, max potential loss would be $2,500 to potentially make $7,500, give or take, right? We generally put a 50% stop loss on that. So if the premium paid, which right now is about $2.50, gets cut in half down to about $1.25, cut it. So on a 10 lot, really we would have about $1,255 risk. Okay, that's the most you would take on a 10 lot to then go ahead and make potentially $7,500. So a very good reward to risk ratio, a good hedge to a long portfolio. This is a trade I'm going to be doing with my customers on a push lower in the NASDAQ. Okay, guys, that's the trade for CNBC Trading Nation. I'm Todd Gordon. Good luck on that trade. Be sure to follow us at Trading Nation on Twitter. I'm at Todd Gordon Trade, and we'll keep you updated on this trade as well as the overall market observations. Good luck. It's hairy out there. Be sure to stay tuned. Be sure to abide by your risk management. Understand that this is a volatile market, very different than what we saw in 2016 and 17. See you guys in the next video update.